Welcome to PhillipCapital's Market Watch. I'm Eric Lee, Sales Director from Phillip Nova. Unless you are living in Japan or in Maldives, you know that inflation is very much the buzzword these days. In our daily lives, the impact of inflation is inescapable. From small changes in paying 30 cents more for a cup of latte to a 30% hike in the cost of rental. US Federal Reserve had changed its narrative from inflation being transitory to it being much too high, that they will take the necessary steps to address the issue. We know how high inflation impacts us as a consumer, but what does it mean to us as an investor? What actions should we make to better position our portfolio to weather this inflationary storm? High inflation can be due to increasing costs of raw materials and wages. It can also be caused by a surge in demand for products and services as consumers are willing to pay more for them. In our current context, inflation has been attributed to the global supply chain crisis caused by COVID-19 pandemic. It was subsequently followed by the helicopter money policy implemented by central banks all over the world, distributing large sums of money into public hands in their bid to overcome recession. The Russia-Ukraine war added fuel further as disruption in the supply of wheat and fertilizer increased our food prices. The disruption of nickel and neon, critical to manufacturing of microchip, also added strain to the already tight supply. To combat inflation, US Federal Reserve had laid out a plan to reduce its balance sheet by USD 1.1 trillion in a year and said on multiple occasions that they are prepared to raise interest rates aggressively, with many of Fed officials now backing half-point interest rate rises at one or more meetings this year. If so, this will be the first time an increase is used since year 2000. Current inflation had often been compared with the great inflation experienced in the 70s, as we had not seen such high inflation numbers since the world exited the high inflationary period in the 80s. Current inflation of 8% is quite similar to the inflation number of September 1973. S&P 500 index was trading around 108 points then. As inflation numbers continued to rise over the next 1 year, we saw that the S&P 500 fell by another 42%. In the short term, high inflation had done heavy damage to the stock market. However, in the middle to long term, as could be seen by the S&P 500 performance after September 1974, the stock index continued to rise, even though inflation remained elevated all the way till November 1982, when it finally fell below 5 percentage points. An investor who bought and held S&P 500 over the period of the Great Inflation has seen a paltry gain of 28% over 9 years, averaging about 3% per annum. Not great, but not as bad as expected. Yet, if the investor bought it at or near the market low in September 1974, he could average a 10% compounded return even as inflation continued to wreak havoc on the economy over the next 8 years. As you can see, it is not all bad news for stocks in an inflationary world. That's because companies with strong balance sheets and are able to increase prices without losing their market share will continue to thrive and generate more cash for its shareholders. Want to know the type of assets and stocks that will thrive in this inflationary climate? My name is Eric Lee, Sales Director from Phillip Nova. I'm a triple licensed representative specializing in shares, futures, forex, and unit trusts. I've been with PhillipCapital since 2004. My clients have benefited from my investment advisories in unit trusts and shares, developing systematic strategies in trading and investing, as well as investment insights based on my personal knowledge and experiences, navigating and investing in the financial markets the past 20 years. To keep my clients informed and current, I provide them with regular market updates via WhatsApp and email. On top of that, clients who are keen to learn about fundamental and technical analysis can also arrange for a free one-on-one coaching session conducted on Zoom or via face-to-face. Feel free to get in touch with me if you have any query regarding investing with PhillipCapital, or if you would like to engage my services or just want to find out more. That's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube.